Alright guys, Happy New Year. I hope you all had a great Christmas and a great New Year. I hope 2018 brings you lots of good health, happiness and prosperity. I'm really excited for 2018. Myself and Akil Stokes have been working literally day and night to put together the most comprehensive wealth acceleration program on the planet. So we're really excited about that. Late January, just have to wait a few more weeks, and it will be ready to deliver to you guys. The response to it has been, I've been blown away. Like the support and the response to the launch and the build up is already just mind blowing. So thanks for that. If you're not already registered, go over to tier1trading.com. The link's on this video, and get your name down there to be notified, be one of the first to notified for the launch. So this is the Trading Edge. This is a daily video that we're going to be shooting out. We're going to have one from the New York session, then the London session, then the New York session, the London session, and we're going to be taking it in turns. It's going to be coming out daily, and then we're going to be posting those up on the YouTube channels as well for you guys, because I thought, it's a bit rusty out of Christmas. No one's, we need to put something out for our clients. So here it is. And I'm going to be sharing with you a couple of trades. The first trade I took in 2018 was a winning trade, New Zealand dollar. I'm in another trade on the dollar yen, but I'm going to share with you some opportunities, one on the pound dollar, which is a structure-based trade, and I'm going to share with you a trading opportunity on the euro dollar as well. So let's get stuck into the charts. I'm going to start on the pound dollar. Pound dollar, since October 2016, when we saw that all-time low, was consolidating for most of 2017 until around the summertime, when we started to break out of that, putting in new highs. And what we've done is we've approached this level of structure that has some significance. One, because it was the level that, if we just draw a horizontal line on at this level, you're going to see, one, it's an even handle number, that 3600 even handle number. But what I like to pay attention to is previous respect of this level. So you're going to see this was the Brexit. Okay, following the Brexit, I always like to pay attention to, so when we have news events like this, I always like to pay attention to where the market closed. So you can see that the bears pushed all the way down, and then we closed above that 3600 level, which may or may not have some significance, but usually, more often than not, it does. So what you can do, if you want further confirmation, you can drop out to the monthly time frames and see if it was tested any time in the past before. So this is the monthly time frame, and you're going to see out here we've also had previous support at that level. So it does have some significance. 3600 even handle number, major level of structure. Now, one of the other things to notice here is that the RSI is overbought. Now, conventionally, the RSI is considered overbought at 70. I like to set mine to 80 because I use it as an extreme filter. I like to use it with Confluence for some other filters as well. So you can see that it's overbought here. And as we drop down the time frames, you're going to see, look, it's continuously overbought. On the 4 hour now, it's up at 90. And then as I look down as I drop down to look for an entry reason, I drop down to the 60, and I see that we have formed this ascending channel pattern. Okay, we've got this ascending channel pattern, and what we typically see with this type of pattern is a breakout and a bit of relief here. We see a relief, and we see a bearish move, particularly when we see the divergence on the RSI. We've got divergence on the RSI. Market's putting up this ascending channel. I've been doing lots and lots of testing on these flags and pennants and wedges, and I have two ways of entering this. So the first way for me to enter this would be a retest of this channel high. As soon as that candle closes, I'd be able to get an ATR based stop, which I think is about 12 pips at the moment, which would allow me to get an ATR based stop above the high. So it'd be a relatively tight stop. And with regards to targets, well, this is the previous structure level here. Okay, one level I'll be looking at is 35.50. Okay, just so happened we know that these 50 levels and even handle numbers are respected, and you can see as we were putting in new highs, outside returns, new highs, well, we held that 50 level as a previous support. Okay, it was resistance, and then it became support. 35.50. So in order to ensure a fill here, remember I'm not a I only take one in, one out on these types of trades, and I only take certain counter trend trades when we're at extreme highs and extreme lows, and or certain levels that are respected in the market that I've built as discretion during testing and things like that. So I'm only taking a one in, one out. I'm looking for a test of this channel and then a close. If we close in here, then the risk reward is going to look something like this. Where I would get my actual target is 2 pips above that 50 level, so 35.52. Whenever we have targets near the 50 level, I always go 2 pips above just to ensure the fill, and very decent risk reward. The second way that I can enter this is a break and close out of this channel. So if we break and close out of this channel, then I can enter next bar market as long as the risk reward is a minimum of a 1-to-1. Again, I'm going to be using an ATR based stop, so I'll be looking at a minimum of a 1-to-1. So if we bring on our fib retracement tool, I know where my targets are going, I know where my stop loss is going, so as long as we don't break and close any lower than 35.90, then I can still enter. All right, but hopefully we can get a test to the high, and then I can get involved. So that's the pound dollar. All right, so the next one I want to share with you is the euro dollar. Now, euro dollar is a slightly different opportunity. We are at a level of previous resistance, okay, but it's not a level that I'll be looking at for any counter trend move. We haven't put in a double top here. This isn't a valid double top, and we haven't retested these highs of 2071 since we initially tested them. So what this is for me is if we just draw on, if we just read price action here, you can see we had a new high, outside return, new high, outside return. We had a new high, outside return, new high, new high. Okay, so as we push down, as long as we don't retest this level, I can use this to look for a potential trend continuation trade. Now, again, the rules are going to have to be that I need a minimum 1-to-1. So even as a trend continuation trader, we'll be looking at an ATR below the low. Again, it's going to be 12 pips. So we're going to be 12 pips below the low. It's going to put us down at 80.78. Front running orders as well. We want to know that we're going to get a 1-to-1 risk reward for a retest of the highs. Okay, so we can narrow down our kill zone now, knowing that we cannot enter this as a trend continuation trade any higher than the level of our kill zone. So we're looking at this level here. Okay, 2023, and then we know if we enter any lower than that, we're going to get a very good, a minimum of a 1-to-1 risk reward, I should say. So that's what I want. That's the initial kill zone. Okay, now as price action pushes into here, there's a couple of ways to enter. We can look for that higher high, higher close candle in here, or anyone familiar with advanced formations such as Gartley's, well, there is potentially a Gartley pattern setting up here. If we bring on our extension tool, you're going to see down at 2010. Okay, X, A, B, C, D, 2010 for the completion point, which obviously will give us an aggressive entry instead of having to wait for that conservative higher close filter, and then we can just enter aggressively. But in this instance, I'd keep the same target, so I wouldn't be taking those conventional advanced formation targets. I'd be using that trend continuation target as well. So an aggressive entry down here, this would be the second place I look for entries. This would be where I'd look to enter, and then I'd be looking to take targets at a retest of the high. I'd be a 1-in, 1-out again, purely because we are at a level of structure resistance. If we just zoom out quickly here, you can see here we're at this level of previous resistance. So we have that nice high test candle wick here as well on the dailies. So a level that I wouldn't be shooting for extended targets, but certainly looking for that last final push up for a retest of this high. All right, and just to show you this quickly, this is the second trade that I got involved with for the year yesterday. I was looking at, it was a structure-based trade. I'm not going to go through it in too much detail, but essentially it was a structure-based trade. We're at previous structure support, pushed down to support again, managed to get in on the 60, looking at targets at 12.48. Again, that's 2 pips below the 50 level. 112.50. I'm 2 pips below that 50 level at 112.48. It was a decent risk reward, and got my stops and ATR below the low as well. So hopefully we can push up and hit targets on this. That'll be a quick-ish in-out trade. All right, and the first trade that I took for the year was on the New Zealand dollar, as you guys maybe saw on the social media. As you look left here, we was pushing up, broke out of this consolidation zone down here, put in new highs, and there wasn't any other. The next level of resistance would have been up here at 170, 170. So I was looking at that level for the next level of resistance, and simply a trend continuation trade on this one. Okay, we was looking at this level up here, so there was no real resistance looking left, and all I did was read price action and look for a trend continuation trade. We were looking at, if we start here, you can see we put in a new high, followed by a new high, followed by a new high, followed by a new high, and as we push down here, you can see we got a nice, this was to be the kill zone that I was looking at initially. We managed to get this nice retest of this kill zone with this big bearish low test candle wick as well. The bulls rejecting the bears, and then managed to get in this for a retest of the high. So looking at a retest of the high for targets. So this was the target, and then looking at an ATR based stop for the low as well. So it was a good risk reward. We had 44 pips out of this trade, and had some issues with the broker as well, so had to take this one on TradingView. But there you have it. So if you lots and lots of opportunity, there's many more opportunities in the market this week. Keep your eye on that pound dollar for that breakout of that wedge, that Gartley formation for any people that trade Gartley patterns, and hopefully I can hit targets on the dollar yen, and we'll be back tomorrow. If you haven't already subscribed to the website, go to tier1trading.com, with 1 being the number 1 as the landing page site, and then you can put your details in there and you'll be notified of the launch, which is coming very soon. So I look forward to seeing you then.